to Mark Gibson Shumaris channel. Accountant with designations CPA, MBA, CMA, ACPA, ASA, Australia. Enjoy learning!
So, good morning, class, and welcome to your financial market class. Today, we'll discuss about equity valuation, no, or simply valuation of stocks. No? So, today, um, before we proceed with the different discussion problems on stock valuation, let's have a quick review of what you have learned, no, from your basic accounting in relation to stockholders' equity. No? So first, let's differentiate debt with equity. So debt securities represent a legally enforceable claim. Debt securities offer fixed or floating cash flows, and bondholders do not have any control over the company, over how the company is run. Now, in terms of the equity, common stockholders are residual claimants. Um, part of your corporation law, this will be discussed. No? So common stockholders are said to be the residual claimants. No? So meaning the preferred shares will have to get their, well, in case of liquidation, preferred shares will have the preference. No? Kaya nga preferred. No? No claims to earnings or assets until all senior claims are paid in full. No? So that's why common stockholders are residual claimants. High risk, but historically also high return. Stockholders have voting rights on important company decisions. Again, this is just a review. This will be covered in full details in your corporation law. Preferred stock have some features similar to debt and other features similar to equity. Claim on assets and cash flow is senior to common stock. So ito na nga, no? So we're actually touching on differentiating preferred stock to common stock, no? Common stock being the residual claimant. So preferred stock, they always have preference, no? Kaya nga, di ba, in terms of ito, dividend payment, no? So it has a fixed annual dividend payment, though this is not legally enforceable. Preferred stockholders usually do not have voting rights. No? Kaya nga, initially, ang sinasabi dito is preferred stock have some features similar to that in such a way that the corporation has to pay them annual dividend, no? On a regular basis. Again, that will be covered in full in your financial accounting and reporting subject. So common stock, par value, little economic relevance today. Shares authorized. This is the shares of company's stock that shareholders and the board authorize the firm to sell to the public. So shares issued, this is the shares of company stock that have been issued or sold to the public. Now shares outstanding, these are the shares of the company stock that are currently held by the public. No? So also one of the discussions that I posted in Google Classroom has something to do with stock investment. No? So in that recording, I've discussed about how stock market works. No? So it's a very interesting discussion. So actually, as early as now, I encourage you to watch that recording, and if it really interests you, then by all means, if you have resource, no, have funds, this is, I mean, the best time to invest is, well, as early as you can, no? So the younger you start, of course, you'll reap the benefit of that in the future. So additional paid-in capital, this is the amount of the amount of money the firm received from selling stock above and beyond the stock's par value. So what are the rights of common stockholders? So these are just basic rights. Common stockholders' voting rights can be exercised in person or by proxy. So meaning if the stockholders cannot attend the general meeting in person, then by all means he can sign a proxy. No? So proxy fight, this is an attempt to gain control of a fight by soliciting enough votes to unseat existing directors. This is very common, no? Especially if you like watching Filipino series. No? So they always have this as part of their plot. Shareholders have no legal rights to receive dividends kasi nga uh, dividends are only given, of course, if there is reserve, no? If there is a retained earnings. So meaning we have retained a certain level of profit, no? To be distributed as dividends. So in terms of stock valuation on common stock, the value of the common stock may be interpreted by the shareholders the present value of an expected stream of future dividends plus the present value of the future price of the stock at the time of sale. No? So kung napansin mo class, the formula is provided below. Actually, as early as now, and I highly encourage you to be familiar with this formula using your calculator. In fact, no, so I just enrolled to another subject for CPA Australia. And the funny thing is, I bought a new scientific calculator. No? Kasi back in undergrad, I'm very used to operating my uh, scientific calculator no back then Casio. So what I did is naghanap ako sa Shopee, sa Lazada nung sana kaparehas para at least hindi na alam mo 'yon, hindi ko naaaralin yung function ng calculator, but that was what a decade ago na no? So wala na yung model na yun. So they offered me second edition of Casio. So well, right now, as you know, we're using Excel file no as our whiteboard, no, and of course, to present that with you, so we're using Excel formula. But then, in your board exam or even in your quizzes, you won't have the use. I mean, you can't use Excel, no. So that's why I really encourage you to practice using your calculator. No? So I think scientific calculators are still allowed naman in CPA board exam. Only those that are, I mean, you can set a program no, inside your calculator are not allowed. Okay, so let's talk about these formula. No, like I said, it looks complex, but then later on, I'll introduce an approach. No, so we'll simplify this by means of segregating, or I mean, really understanding what's inside this formula. So let's talk about this one. No? Kasi even this formula and the other one will give you the same result. No? So P sub 0. P sub 0 is the price now. This is the price of stock at year 0. So remember in our previous discussions, no, when we say P sub 1, that would be the price next year. So don't confuse yourself. No? D sub T, dividend per share at the end of year T, and then K sub E, this would be the required rate of return on the share, no? So, and the number of periods. So notice this last, no? In this formula, you have D sub T. So this is the dividend. 1 minus 1 plus K sub E, this is the return, required rate of return raised to minus N. N is the number of periods over I. I is also the required rate of return. Plus P sub T. Notice P sub T, this is the price at the end of year T. No? Multiplied by 1 plus K sub E raised to minus N. No? So actually, this will all make sense no, when we apply this to a discussion problem. So here we go. No? So discussion problem number 3, if the investor required rate of return of 15%, how much would be the value of the stock? No? So let's have discussion problem number 3. Let me read the, oops. Let me read the problem. So Mr. T purchased stock F at the beginning of the year. The dividend at year end is expected to be 2.5 per share, and the market price by the end of the year is expected to be 60 pesos. If the investor's required rate of return is 15%, the value of the stock would be how much? So let's have problem number 3. Pero pansinin mo class ha. So we started with the theoretical part, and that's why I'm just putting it here, no? So at least meron na tayong guide, no? Um, like I said before, no? So I'm not sure if I've shared this with you, but back in the undergrad, it was si Ma'am Malyari, Ma'am Nemia Malyari, no? So she likes to write something in the board, and then sabi niya, every time down that you take note, no? Every time you write down something on your notes, 20% of that will be retained to your head. No? So imagine class, no? Just simply by writing this formula, 20% of this will be retained in your mind, in your head. So by the time that you would practice and review, so 80% na lang ang kailangan mong problemahin. No? So it really works for me. No? So at that time, talagang mahilig ako magsulat. No? And I am very fond of that tip, no, from Ma'am Malyari. I hope she's still with the academy. I hope you will also experience her teaching, no? So going back to problem number 3, so yun na, no? So here's the formula. So let's just derive the formula using the given data, no, in the problem. So alisin ko lang yan, na. So ano ba yung mga given? So we have P sub 0. P sub 0 is the price, no? At the end of the year is expected to be 60. This is price now. 2.5, this is sabi dyan, dividend at year end is expected to be 2.5 per share, and the market price by the end of the year is expected to be 60. So meron na tayong D sub T, which is 2.5, and P sub T, which is 60. No? Also, we have 15% as the required rate of return. No? So with that, let's apply it in using the formula. No? So let's use this formula number 2, and then what you can do afterwards is try this one. No? So you should be getting the same. No? So sige. So isa-isa natin class ha. D sub t, that's 2.5, multiply by 1, ayun yung 1, minus 1 plus 0.15 raised to minus 1 over 15%. No? So, bin-breakdown natin yung formula into 2. Plus, ayun na, P sub T, that's 60. No? Punta natin yung second formula. 60 multiplied by 1.15, basically that's 1 plus 0.15 raised to minus 1. No? So again, use your scientific calculator or your basic calculator to derive this formula. No? So the answer to problem number 3 is 54.35. Again, class, no? In the stock valuation, there are two elements. No? So the price now plus the projected dividend, no, projected dividend by way of estimating it using the required rate of return. No? So the value of the stock would be 54.35. So that's problem number 3. Okay, so in terms of preferred stock naman, no? So preferred stock is an equity security that is expected to pay a fixed, so tandaan yan class, no? Fixed annual dividend indefinitely. Kaya nga sabi natin kanina, preferred stock has some features that are synonymous to a debt, no? In such a way that we're actually paying the preferred stockholders fixed amount of dividend on a regular basis. No? So what's the formula to put a value on the preferred stock? It's D sub 1. So take note of this. D sub 1, this is the next period's dividend payment. And then K sub E, this would be the discount rate. No? And then P sub PS 0, basically this is the preferred stock's market price. No? So let's have discussion problem number 4 to illustrate to you stock valuation, preferred stock valuation. No? So let's have problem number 4. Okay, so basically in problem number 4, we're being asked to about the price of the preferred stock. No? So investors require an 11% return on a preferred stock that pays 2.30 annual dividend. Okay, so let's derive the formula. D sub 1, next period's dividend payment. So again, class, no, for a preferred stock, take note that the annual dividend is fixed. No? So therefore, the amount of dividend that you will pay today or this year will also be the same next period, and so on and so forth. No? So that's why D sub 1 is equivalent to 2.30. Okay, 2.30 over 11%. No? So therefore, the price of the preferred stock would be 20.91. No? So very basic, no, class. All we have to do is to, well, make sure that we pick up, no, the right details from the problem. No? So that's problem number 4. Let's continue our discussion. No? So zero growth valuation model. This valuation of stock assumes that the dividends are not growing at all. Thus, it has a constant amount of dividends declared. A non-growing dividend is valued similar to a preferred stock. If the growth denoted is equal to 0, the formula would end by dividing dividends expected after a year by the required rate of return. So again, this is another valuation model. We call it zero growth, but it assumes that there will be no change in terms of dividends declaration. So it is fixed. That's why it's similar approach to the preferred stock valuation. No? So in fact, class, very familiar ka na dito agad sa formula. It's D sub 1 over K sub E. No? So basically, this is the price of the stock at year 0. That's P sub 0. So D sub 1 is your dividends for next year, no, over the required rate of return. So let's apply it to discussion problem number 5. So in discussion problem number 5, sabi dito, if the next dividend is due in 1 year and investors require a 10% return on the stocks, what is the current market price? That's number 1. And then what will be the price immediately after the next dividend payment? No? So let's have problem number 5. So let me read the problem. Piolo Company's common stock has paid a 5 peso dividend for so long that investors are now convinced that the stock will continue to pay annual dividend forever. Aba, ito pala, may forever dito, no? So if the next dividend is due in 1 year and investor requires a 10% return on the stock, what is the current market price? What will be the price immediately after the next dividend payment? No? So again, what's the formula? The formula is D sub 1. This is the price, dividend. No? Dividend next period. So that's 5 over 10%. Now 10%, this is the required rate of return. So the price is 50. So ito medyo tricky, class, but remember under the zero growth valuation model, the dividend this period will also be the same dividend for the succeeding periods. Kaya nga sinasabi dito, no? So they are now convinced that the stock will continue to pay an annual dividend forever, no? So meaning constant, not changing, no? So therefore, the answer is also 50 pesos. Okay, so next we have the constant growth valuation model. Take note that in order for the model to be valid, the following conditions should be met. Number 1, the firm must have a constant dividend growth rate. So that's G. The discount rate must not be less than the growth rate. So ito pala, class, before we proceed with the constant growth valuation model, we have to satisfy 2 conditions. So una, dapat daw constant dividend growth rate, tapos yung discount rate or yung required rate of return must not less than the growth rate, no? So P sub 0 is equals to D sub 1 over the required rate of return minus the dividend growth rate. No? So we also call this Gordon growth model. No? So again, let's apply that concept, no, in order to cement our understanding. Let's have problem number 6. No? In problem number 6, we are being asked to compute, no? So what would be the stock worth? And then what is the stock worth if the investors expect Dynasty's dividends to grow at 3% per year? No? So Dynasty Corporation pays 3 peso dividend in 1 year. If investors expect that the dividend to remain constant forever, they require 10% return on Dynasty stock. What is the stock worth? No? So again, let's check first, no, if we can apply the growth Gordon growth model, no. So una, sabi diyan dapat daw constant yung growth rate, no. So eto na nga, no. So they expect that the growth rate would be constant, and then number 2, sabi doon dapat daw ang required rate of return must not be less than the dividend growth rate, no. So let's have problem number 6. So in problem number 6, ano ba yung mga data na available na sa atin? No? So we have D sub 1. This is the price or the dividend in 1 year. So 3 over 10%. Para lang muna makuha natin yung stock price. No? So that's 30%. Now, what is the stock worth if the investor expect Dynasty's dividends to grow at 3% per year? No, so 3%. This would be the dividend growth rate. No? So we have 3 D sub 1 over 7%. Paano natin nakuha yung 7%? So that's 10% less 3%. 10% being the required rate of return that's given, and 3% would be the dividend growth rate, no? It's also given naman. So 3 over 7%, the value of stock would be 42.86 pesos. Okay? So I think the key elements here is to make sure that we satisfy those two conditions first before we can apply the constant growth valuation model or the Gordon growth model. Okay, so next we have the variable growth valuation model. The variable growth model assumes that the dividend growth rate will vary during different periods of time. It is used if the firm is expected to grow at a rapid rate for a few years and then revert back to a normal growth rate. No? So parang kaya nga variable, no? So meaning it varies, no? So from time to time. So let's have discussion problem number 7 to illustrate variable growth valuation model. So in problem number 7, the required rate of return is 9%. What is the present value of the common stock? No? So let's have problem number 7. Okay, so Piolo Company paid a dividend over the last 12 months of 1.67. So ayan. This represents the current dividend rate. Dividends are expected to grow by 20% per year over the supernormal growth period of 3 years. No? So 20% daw. So ang ginagawa natin is we'll increase the dividend by 20%, or simply 1.67 multiplied by 1.2 or 120%. So that would be 2 pesos. Next, sabi daw, and for the next 3 years, ano? So 2 multiplied by 1.20, that's 2.40 pesos. And then finally 2.4 multiplied by 1.20, that would be 2.89 pesos. No? O sige. Then we have to compute for the present value. Ito class, there's another discussion on how to compute for your present value. Pero ito yung pinakasimple. So that would be 2 multiplied by 1.09. Yung 0.09, that would be your required rate of return raised to minus 1. No? So that would be your n. No? So gawin nyo lang lahat yan dun sa tatlong dividend projections, no? So year 2, ang pansinin mo, raised to -2, and then of course in year 3, raised to -3. So get the sum, that would be 6.09. Now, for year 4, sabi dyan, it is expected to grow at normal constant rate of 5%. No? So imagine, no, the first 3 years, sabi super normal, so beyond expectation. No? So they increase the dividend payment to 20%. No? So kung isa ka sa mga kung isa ka sa mga investors dyan, of course, happy ka, no? Dahil nga 20% year on year, no? And then during 4th year, happy ka pa rin because they're still paying you dividend, no? Though at a lower rate, no? So 5%. Again, we'll have to compute for the increase, no? So 2.89 multiplied by 1.05 or 105%, that would be 3.03. Ngayon, let's now compute for the requirement. So what is the present value of common stock? No? So remember class, ha? Ang pinapa-compute sa atin dito is yung P sub 0. So P sub 0, syempre, no? So meron tayong P sub 3. This is the price, no, on the 3rd year. That would be 3.03 over 0.04. Paano natin na-compute yung 0.04? So that's 9% minus 5%, no, yung dividend growth rate, no. So that would be 75.75. Now, kung meron na tayong price in P sub 3, kasi saglit lang ha, para lang mas maintindihan. So meron tayong P sub 0, P sub 1, P sub 2, P sub 3. Pansinin mo class, yung P sub 3, ito na yung na-compute natin, no? Ito yung 75.75. Ang nire-require ng problem is to get the present value. So meaning the value right now. So meaning ito yung hinahanap, yung P sub 0. So wag magpapalito ha, kasi ang P sub 1 is the price next year, no? So it doesn't follow na P sub 1 is price during the first year. No, it's not. P sub 0 is the price now, P sub 1 is price next year. So therefore, P sub 3 in this case, actually this is the 4th year, no? So we have 75.75, pinapa-compute sa atin is the present value of common stock. So meaning the value today, no? So in that case, we have to compute for the present value. So 75.75 multiplied by 1.09 raised to -3. So nakuha na natin yung price, present value of the price. Baba ko to ha, para makuha natin. This is the present value of the price. And then of course, we have to get the present value of dividends. No? So in that case, 6.09. Na-compute naman natin yan kanina. No? So get the sum. So the price now would be 64.58. No? So pansinin natin class dito, no? In calculating your present value of common stock, there are actually 2 elements. No? So number 1 is the price, the market price, no, and the dividends. No, all we have to do is get the present value. No, so again, there is a separate recording on how to compute for the present value. So I'll be also sharing that with you para at least meron kang additional resources. No? So that's 64.58. No, so that's problem number 7. Problem number 8, another illustration. No? So what is the value of preferred stock when the dividend rate is 16% on a 100 peso par value? The appropriate discount rate for stock of this risk level is 12%. No? So that's a problem number 8. So in problem number 8 class, this is on preferred stock valuation. No? So pansinin natin, sige lang, paano ko ba to? Ayan. So given our 16%, this is the dividend rate. on 100 peso par value. So to get the dividend, so all you have to do is multiply 100 by 16%. So meron ka ng 16 pesos. This would be your dividend, no? Over the required rate of return or the discount rate of 12%. No? So 16 over 12%, that would be 133.33. Again, no? I think the key elements here is for you to be familiarized with the different terminologies, no? Kasi tingnan mo in this case the dividend rate is given. It's not the dividend value, no? So all you have to do is multiply the dividend rate with the par value to get the dividend amount, no? So that's problem number 8. Let's have, I think the last, okay. So let's have problem number 9. What is your expected return? If you require an 8% return given the current price, should you sell or buy more stock? No? So ayan na. So you own 20 shares of Dalton Resources preferred stock, which currently sells for 38.5 per share and pays annual dividends of 3.25 per share. So what is your expected return? So let's have problem number 9 class. Oops. So problem number 9, meron ka daw dividend of how much? 3.25. Ato class kung napansin mo, this time ang pinapa-compute na sa atin is yung required rate of return, no? So ginajumble na natin yung formula, parang ano na tayo, a more complex illustration of stock valuation. Kasi nga alam na natin yung straightforward, alam mo naman si accounting, itinetest ka talaga niyan, no? Tinetest hindi yung knowledge mo, no, but more of how you analyze the problem, no? So in this case, di ba remember ang formula lang naman natin is to get the market price is your dividend over the required rate of return. But this time, given yung market price, given yung dividend, no? So we are now being asked to compute for the expected return, no? Or the required rate of return. So that would be 3.25 over 38.5. 38.5 is the market price. So the required rate of return would be 8.44%. No? So next, if you require an 8% return given the current price, should you sell or buy more? So yun na. So formula is 3.25. Balik tayo dun sa formula natin kanina, over 8%. No? But this time, 8% yung required rate of return natin. So sabi, should we buy or sell? So sabi dito, the value would be 40.6625. So we should sell. Why? Because we can gain from selling it. No? Kasi nga ang current market price is 38.5 and yet the value of our stock would be 40.625. Okay, so that ends our discussion on the equity valuation. So a separate discussion on derivatives was also provided in Google Classroom. So please find the time to also watch that. So thank you very much for listening to this recording. If you have any questions, you can always send me an email to my personal Yahoo mail. So that would be markgibson.manawis@yahoo.com.ph. So that would be all for today. Stay safe and stay healthy, and see you again in our next session. Goodbye.
This has been your instructor, Mark Gibson. Thank you for learning with us. See you in our next discussion. Don't forget to like and subscribe. See ya!